Pension funds such as EPF and KWAP are forced to look for alternatives to get higher return on the back of market volatility. We asked KWAP CEO Datuk Wan Kamaruzaman if it can hit its 5% target this year. Thank you for joining us today, Datuk. So basically, EPF has posted a very disappointing result for its investment income recently. And last year, KWAP posted about 5.4% of investment return last year. How would your investment return look like this year? Will you actually miss your 5% target?
We are beginning, all institutional investors are beginning to feel the impact of this lower for longer environment. And for last year, yes, we did achieve 5.4% returns, which is below our expectations. But for this year, our target is about 5%, and I think at this point of time, we are able to achieve the 5% target. But how do we achieve the 5% target? I think the key to it was, I think, the good rally in the Malaysian bond market after Bank Negara has cut the OPR levels. Whereas the equity markets are still in the doldrums, which is slightly negative at this point of time, but it's been compensated by the good performance of the fixed income.
Since 6 years ago, KWAP has been diversifying into other asset segments, especially in the overseas market. So how has that been so far? Are you planning to allocate more money in private equity and also real estate segment?
On the asset allocation, prior to this, we were at 90-10 kind of asset allocation, whereby 90% are on our traditional asset class, which is equity and fixed income, whereas the 10% balance are on real estate, 7%, 2% is in private equity, and 1% in infrastructure. But at this point of time, the asset allocation is still below, that 10% is still below the allocation that we have been allocated, that we have allocated for that asset class. But our aspirations, because of the good opportunities in this alternative asset class, we feel that we want to increase that asset allocation in the future, and based on our asset allocation revision at the end of the year, we are looking at increasing it to a high of 15% on the alternative side, and the remaining 85% will continue to be on the traditional asset class.
So due to the weaker ringgit, the government actually is urging KWAP and also EPF to bring back the money from overseas and invest more in the domestic market. So are you planning to do so, and what's the current situation right now?
In the first place, we are still in the process of diversifying our investments abroad. We had the asset allocation approval to invest up to 19% abroad, and currently we are close to 11%. And at that point of time, the government has issued a memorandum asking us to postpone all our overseas investments overseas. Until today, it still stands. So we are still at closer towards 11% of the asset allocation. But our aspirations are still to increase it rather than to reduce it and sell our assets and bring the money into Malaysia and focus on local investments. But what we did last year was that we have sold one of our real estate property in London, which is 88 Wood Street, with a hefty gain of more than 250 million ringgit. But that is not to answer the government call, it's rather that it ticks all the box of our exit strategy in terms of returns as well as in terms of capital gains. So if there are opportunities like that, we will continue to divest our existing overseas portfolio. But if not, we are still looking at trying to increase it to the 19%. We are looking at it in 2020 to have that 19% of our assets are in overseas investments.
Right. Now, since ringgit has gained about 1.94%, and that's against Australian dollar, and about 17% against the pound to date, that was after Brexit. So are you looking to invest more in these two countries, Australia and the UK?
Well, the opportunities in Australia are still very good because I think we do have quite a lot of exposure. We have 4 buildings and 3 logistic assets. But we feel that Australia, even though the opportunities are still there, we already have sizable exposure. In UK, right now the balance we have is only 2 buildings. One is a commercial building and one is a shopping mall. We feel that the downturn in the sterling at this point of time, which is quite substantial after Brexit, we feel that there is a lot of opportunities, especially on the returns as well as on the currency. But that does not mean in that those just 2 countries. We are also looking at investing in other developed world countries, which includes US and maybe Europe as well.
So just now during your keynote address and also during the press conference, you mentioned that KWAP has about 2% in private equity. Are you planning to enlarge the exposure in that portfolio?
Based on our June numbers this year, the drawdown is 1.58 billion ringgit, or 1.26% of the asset allocation rather than that 2%. We do like the private equity because I think I mentioned that in the last 5 years, private equity has given us the best returns in terms of all the in comparison with all the asset classes. So we are looking at trying to increase our private equity exposure to probably about 4% by the year 2020.
KWAP says it will continue to look for opportunities overseas despite a weaker ringgit and plans to increase its private equity allocation to 4% by 2020.